Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the volatility index for the CBOE. That's ticker symbol VIX. And I've left my lines on the chart from last week's report, where you can see right here I drew a diagonal line with the end of the line being my target for the VIX. I also said that this would be a 2-week forecast. You can see we're about halfway through that time segment, and we've already hit the target right there again, which is the end of the line of 1749. Now, what does that mean for next week? Well, I'm going to leave this in place right there because I think the VIX could still go a little bit higher, but eventually I think by the end of next week it'll pull back and pretty much stay between 17 and 18. You could see down here the CCI is still moving up. The stochastics are still moving up. Not quite overbought just yet, although the CCI is overbought. I think the momentum will continue to move higher on the VIX, which in turn is bearish for the S&P. So let's go right to the S&P represented here in the spiders. Again, I left my lines in place. 2-week forecast. You can see that we're right on target. We closed almost exactly on that line right there. You can see that the volume is picking up on the way down. What does that tell us? It tells us that the sellers are still maintaining that sell pressure. We have gaps below the market here, hence the reason why I have that gap fill target right there at the end of that line. I think there's an 80% chance the gap will fill. Again, that's bearish for next week, and we will have to keep an eye on the volume. Once the volume starts dropping, that will tell us that the sellers are starting to lose some of that sell side momentum. Right now, the stochastics are still moving lower. The CCI, as I magnify that for you, is dropping below the zero line or the signal line. That's telling us that the momentum is still heading lower, and I wouldn't expect the spiders to start moving up until we see a pivot starting to form on the CCI down there. So again, keep that in mind. If we look at the Dow Jones Industrial Average in DIA, you can see same scenario. 2-week forecast, end of the line being my target, gaps to be filled, still down below the market. The CCI and the stochastics are still moving lower. And remember, when we hit this top back here, right, I said that the CCI was showing a negative divergence. That was the first telltale signal that the market was forming a top. So keep that in mind. Next time you see that, the CCI is a very important leading indicator, especially when you use it to identify divergences such as this. So Diamond still looking for lower prices next week. If we look at the Russell 2000, which is a more broad-based index, although it's smaller cap stocks, you can see red candle. It's 2-week forecast, still moving lower. Gaps below the market here. The stochastics today crossed with a sell signal. Let me magnify that for you. When the blue line crosses below the red line being the signal line, that's a sell signal. The CCI gave the sell signal earlier this week on Tuesday and Wednesday. See how that crossed below the red line? That's the sell signal for the CCI. So again, another lesson is that the CCI more or less leads, or is at least more sensitive to the stochastics. So I'm going to leave those lines in place with the end of the line for Russell 2000 right there at 1633.72 being my target. Now, we look at the Qs. QQQs more or less represents the tech sector. Same story. All the forecasts are coming true as I said they would. The market closed right on my forecast line. Still just about halfway through this forecast. Gaps below the market as well. Look at that volume. Telling us the tech sector is heating up on the sell side. The short sellers are loving this, obviously, especially those that are short Tesla and Apple and such, but the volume is increasing on the way down, telling us the sellers are very motivated. Look at that divergence that we saw weeks ago on that CCI. Now, last week, It didn't pull back as I originally thought. That's why I went out 2 weeks on this one. But the CCI was telling us watch out below, and look at that. When it crossed below that 100 mark, that's that red line, that's a sell signal, and the CCI was absolutely spot on. So again, these are indicators that we talk about all the time. We talk about trading concepts. We talk about risk management. Make sure you pay attention to our risk management rules that we have laid out on our website. And this coming Monday, we have an open house Q&A session where I'm going to analyze the markets once again on Monday night. I'm going to take stock symbols from the audience throughout the rest of the call. That's going to be from 8 to 9 p.m. on Monday. Don't miss it. It's free. Plug in, get some new ideas, and especially focus on risk management. And we're going to talk a lot about that on Monday. So have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.